All right, what's up, Bulldogs? All right, I've got. I know you guys are wondering about your crypto holdings, so I've got the expert here, Gregory from Dapp University, who's also a coaching client of mine. You've probably heard me bragging about Gregory because he's just done an awesome job with his business. He has a YouTube channel called Dapp University and a website of the same name, and his business is basically like teaching people how to become blockchain developers. And we'll talk a little bit more about our history at some point. But yeah, Gregory's been extremely successful, and and just kicking ass in every in every area of business. He's so he's doing really well. But yeah, welcome, Gregory.
Awesome. I'm super excited to be here. Talk about everything that's going on in the crypto space. I'm sure like the number one thing on everybody's mind right now is like, what is going on with the crypto markets? So we can talk about whatever you want to. I'll let you kind of control the conversation here. I've got a lot of ammo, a lot of exciting news that's come up recently, but yeah, excited to be here, and I'll just follow your lead, John.
Awesome. So yeah, I mean, let's just jump right into it and start talking about the big question is, it's a two-part question, which is one, why are things going down? What the heck is happening? Because this is like a big downward movement, and then two, is this dangerous? Is this bad? Is this the end of the world? Like, am I safe? Are my holdings safe?
Yeah, totally. So I'll tell you like kind of what I talked about on my live stream this morning. I've been doing these every weekday, Monday through Friday, 9 a.m. Central Time. You can check those out on my YouTube channel if you want to get the live updates. But I'll give you the same approach I gave there, which is, I look at big picture stuff. I don't really try to make like short-term price predictions about what I think it's going to be on X day. I don't tell people like, buy now, buy later, et cetera, et cetera. I typically just look at, what I'm invested in, mostly Ethereum, also Bitcoin, and then a few DeFi tokens, which I think are, this is a super hot, niche right now in the blockchain space. And what's going on with those? Do I need to be taking money off the table? Do I want to put more money in? So that's how I approach this. I'm not a big trader, I'm not a big TA guy. I do look at a certain amount of analytics. I can talk about what those are here in a minute, but I'm not a big chart guy. You know what I mean? I'm not like always trying to call like the next move and all that kind of stuff. But I'll tell you what I feel is the big picture. I think the big burning question on everybody's mind right now is like, is this the top? You know what I mean? Right. Is this the top? Are we about to enter into a multi-year bear market? I don't think so. Okay, for several reasons. We can talk about those. One of the metrics that I do like a lot is well, for a couple reasons. The first is a couple metrics that I do like to watch pretty closely is with on-chain analytics, and that's one of the coolest things about blockchain is you can actually analyze all the activity. It's a public ledger. Okay. So you can basically see how much Bitcoin everybody has in their wallet, how much ETH everybody has in their wallet. Some of them are exchanges, et cetera, et cetera. But for people who are holding it, you can actually analyze what their activity is. So you can look at like whales. What are they doing? Are they buying more cryptocurrency when these price movements swing? What percentage of the market is actually in profit in their cryptocurrency? So you can chart that stuff out. So there's a metric that I like to watch quite a bit. It's called Nupal. So if I'm getting like too much here, just let me know.
No. Let's talk about what Nupal is. So
Nupal it's net unrealized profit and loss. Okay. So basically what it does is it takes the entire blockchain, all the accounts. So Bitcoin uses UTXOs, Ethereum uses actual account-based model. But what it does is we're just going to call them accounts or wallets. It's a very, generic term for both models, like basically something that you control that holds cryptocurrency that's not like a smart contract. Okay. So we can analyze those and see what percentage of them are in profit. Okay. And so we can take that and actually extrapolate a metric called Nupal, so net unrealized profit loss. There's a chart that you can look at where it actually plots that out and says like, once you reach a certain point, it's a high indication that the market is in euphoria. Okay. And pretty much every single market top that we've ever had in the past has been charted out as a euphoric blow off top. Okay. So we're not there yet on Nupal. We got close, but we also got close in January. And don't forget, we had a big dump in January where we corrected a lot. I can't remember the percentage off the top of my head, But that's a metric I watch pretty closely for Bitcoin. I think that Bitcoin is a pretty good indicator of where the overall market's going.
Yeah.
You know what I mean? So the other thing about this is like, there's two schools of thought here. There's two schools of thought. Cryptocurrencies have such a limited price history. Bitcoin's only about 10 years old, right?
Yeah.
So we're trying to still figure out like how it works. We have some behavior to go off of. Then there, you know, so there's two forks and there's a fork in the road. Some people think that at some point Bitcoin reaches a certain level of adoption where we break out of these big boom and bust cycles where it'll be a lot more, you know, stable, and that you could theoretically have sort of like an up only type of scenario. Then the other school of thought is, no, we'll still have these boom and bust cycles because of human nature and basically how these markets work.
Yeah.
I'm more of the other camp. You know what I mean? Where I think we're probably going to have a big boom and bust cycle like we did last time.
Yeah, and that makes sense with the new pool, because then it's like, I mean, like the one way I'm thinking about new pool, correct me if I'm wrong, is that it's like, it's how long someone has been sitting with their investment without the point of an investment is to eventually sell that to realize a profit, or to get out and say, all right, I've been burned too much. And so the longer that people are sitting there, eventually they have to sell. So that amount that's sitting out there, that's indicating that, okay, it's more likely that people are going to start dumping or selling because they've got all this unrealized profit. Is that?
I think so. I think there's some game theory involved. You know what I mean? Mm-hmm. I think people still view Bitcoin as a growth asset as much as the narrative is pushed as a store of value, et cetera, et cetera, et cetera. I think people still view it as a growth asset.
Yeah.
And at some point you want to get out of a growth asset into something that's not like jumping around so wildly. Once you've made enough money, I mean, don't think for a second that somebody who just put in $1.5 billion worth of Bitcoin is not eventually going to take some of that money off the table. You know what I mean? So that's how I look at it. Again, nobody's got a crystal ball. I don't personally think like the top is in. I could be wrong. There's lots of other indicators. We can talk about why it happened in the first place, like why we're seeing this pullback.
What do you think happened?
You know, it's always hard to know exactly why. There's always lots of factors. You know what I mean? I think one big factor is over leverage. The market's been pretty overcooked for a while. Like if you look at Noople, you look at some of these other metrics like that, you know, I would call it overcooked. I mean, we moved up fast. Like 45 days was not normal, right? You know, we're just entering into the space, or seeing this thing go like, they just like, oh, this is what crypto is. You know what I mean? It's a rocket ship that's up only. And it's like, that's not really how it works. So we saw a lot of growth, but what's happened over the last 45 days, I still would not consider a blow off top.
Okay. And when you say blow off top, what do you mean?
If what happened over the past couple of days, happened, it did not happen, and then we just rocketed to 100K over the next like 14 days, that's probably a blow off top.
Oh, I see. Okay.
You see what I'm saying? Like where Bitcoin's at 50K and then doubled again in like 14 days, we would have been in bright blue Noople territory, and it's probably like game over. The cool thing about Noople is the metric resets with these corrections.
Right. So, exactly. Yeah.
Yeah. These people lose money. It sucks in the short term, but for the long-term health of the market, it's actually beneficial.
Right. Okay. And so when you say that, like if it was a blow off, like if it did go up to 100 instead of going down now, then you're saying, when you say game over, you mean game over like there's an imminent serious crash, or
multi-year bear market probably, or maybe a year. The crypto cycles, we like I said, with such limited history, we don't know how long. Like some people are locked into the 4-year cycle sort of mentality. There's some data that says the cycles could get short. I mean, they could get shorter, they could get longer. There could be statistical variance, right? Where there's like, we think it's about like this, but it could be a little more, a little less. You know what I mean?
Now, when we look at like the stock to flow ratio, that what's that chart?
Yeah, I can look it up.
I'll bring that up. Because I was looking at that the other day before this crash, and I was like, oh, we're a little bit above that little, and I haven't looked at it since.
I can look it up right now.
Yeah. Okay.
I have a Glassnode account, so I can even share my screen potentially.
Oh yeah. Let's do that. Let's share your screen.
Let me first like pull it up.
because that was the thing that really convinced me, like, to actually put my money into it. Because when I saw that, I was like, okay. And when I look at it now, it tracks pretty damn accurate. And for it to be an exponential graph and to track accurately, that says a lot more than just a straight graph.
Yeah, the big underlying assumption with stock to flow is that there is demand for Bitcoin. And if the demand for Bitcoin continues to increase, then the model holds up. If there's not demand for Bitcoin, then we could see a lot of deviation. But one of the big narratives of this cycle, and I think it's there's a lot to it, is the institutional adoption of cryptocurrency. I mean, it's undeniable when you're talking about like Apple buying Apple didn't buy Bitcoin, everybody. Right. Tesla buying $1.5 billion Bitcoin for the balance sheet. MicroStrategy last year putting in a huge buy. Square, I think I just saw news that Square just bought more, like around okay, like a lot more. So that's another bullish kind of indicator, is like people are buying. Big players are buying this stuff still. Yeah.
And then you've got that, the network effect, right? Mandelbrot's law, is it called?
Yeah. Metcalfe's law. Oh, Metcalfe. So, okay. Some people talk about like, hey, what's the price targets, et cetera, et cetera, et cetera. I mean, I don't have firm price targets, but I did a video on my channel where I analyzed Raoul Paul is a really good guy you can follow, CEO of Real Vision Finance, former Goldman Sachs executive, super sharp with like global macro insights. I followed him a lot last year when the market started to change. You know what I mean? Like when it was like, oh, hey, like we're probably in a bull market. He was one of the first people that I listened to who was saying that. And he was right. Like he had the charts drawn out. He was like, this is the indicator. And he's had a really great track record. So you can throw around like fancy names like, CEO, Goldman Sachs, et cetera. But to me, the proof is in the past calls. And that's not always an indication of, future accuracy, but there's a lot of reasons to listen to somebody, you know what I mean? So
and that guy was worth a lot of money. I mean, the video you sent me, he's worth a lot of money. And I believe in that video, he said he put 90% of his net worth into Bitcoin. And this is like a year ago. So he's probably looking pretty good right now.
Yeah, it's the guy who's retired on the Cayman Islands, basically.
Yeah.
You know what I mean? Yeah. His whole thing is he's irresponsibly long, Bitcoin.
Yeah.
So, he's branched out to other cryptos as well, from my understanding. And I've been following him on Twitter. He's saying he's looking at, kind of going down the risk curve, so to speak, or going up it, whichever direction it goes. But yeah, let me pull some of these metrics. I'll take. Sorry, I'm getting a little scatterbrained, but the price prediction, you were asking about that. So Metcalfe, I analyzed that in a video. Go check. You can go search my YouTube channel. You can look for massive Ethereum price prediction, I think is what it's called. So he lays out why he thinks Ethereum will reach a certain price. And basically what he says is there's a correlation between the number of active addresses on the network and the actual price of the cryptocurrency itself. So he talks about Metcalfe's law, which was an idea that got really popular in the .com boom. To value telecommunications networks.
Right, exactly, yeah.
So the whole idea is that the value of a telecommunications network is correlated to the number of users, but it's an exponential relationship. So basically how he illustrates that, you can look up Metcalfe's law on like Wikipedia, there's a really good diagram, but basically like if you have a telephone network and there's 2 phones, there's 1 connection. There's 5 phones, there's 25 connections. 100, it's just exponential, right?
Right.
So, he says that basically that relationship appears to be true of the price of cryptocurrencies on a network, a layer 1 blockchain cryptocurrencies like Ethereum and Bitcoin. Now some people have this a huge leap in logic, right? Like, how do you value the cryptocurrency based on? But if you look at the data, that's what the data looks like. And if you lay Ether's price data after 1,000, I think it's 1,000 active accounts over Bitcoin's, tracks almost identically. So he reasons that assuming the cycle theory plays out to be true, assuming that all these other assumptions are correct, that his price target's $20,000 per Ether at the end of this cycle.
Yeah, that makes sense. When I watched that video on your channel, like seeing that overlay, I was like, wow, that's and when you think about it too, I mean, it's like you've got companies like eBay, Facebook, right? That MySpace, right? That basically is the same thing, right? I mean, you like why did or Instagram, like Instagram, you know, any of the social media platforms, Snapchat, right? Those companies became so valuable because of their user base, as that network effect, as they had more. That's what made those juggernauts and worth so much money, rather than just, you know, just having a social media site is not worth anything. It's the users that are on it.
Yeah, totally. And people talk about that with, you know, the actual utility of the blockchains themselves too. I'm trying to pull up this diagram and I can't find it. Let's see here.
Okay. While you're pulling that up, I got some bragging to do about you. So guys, Gregory, if you haven't already, go check out his channel. Like I said, he's got great analysis on all this stuff. And he does a live stream every morning going over the news. I've been hooked to his live stream and watching it every morning because it's so good. And yeah, I mean, I gotta brag because Gregory, I think I started, he started as a coaching client like what, 2.5 years ago, maybe.
It's been three
3 years. Wow.
January 2018.
Yeah.
Yep.
And Gregory was working full-time job, you know, the traditional, like, no YouTube channel, nothing. And then, I mean, he built it up. We worked together, came up with, you know, some of the concepts and stuff, but he built up the YouTube channel, got to the point where he's making, you know, 6 figures on the business every month. So it's just been crazy to watch over 3 years, seeing him, you know, just reach milestone after milestone. And the reason why I tell you guys the story and why it's so cool is because so many of you guys email me all the time, like, I don't understand how you could possibly do this. I don't see how this is possible. And I remember in some of our early coaching calls when you're like, you know, you're like, I don't know if I should do this, or like, you know, it's like, what if it doesn't work out? And it's like, and all these questions. And then it's like, because it was a long, like, I remember it took a while to get traction on the channel and to make some money and to like eventually launch the course. And it was like, I don't know, is this thing actually gonna be worth money? And yeah, so you guys got to just, you know, stick in there, and you know, and every story is not the same, but you know, Gregory did everything right and just continues to be amazing at what he does. So go check out his channel if you haven't already. So,
well, it's crazy. I mean, tell you, you know, can talk a little bit about the early phase. So one of the crazy things about that is, yeah, I started doing YouTube days after Bitcoin hit its 2017 all-time high.
Yeah.
So
yeah.
Like, I watched the price of Bitcoin drop from $20,000 all the way down to like $3,000 during that time. I watched the Google Trends search volume for blockchain and everything also do the exact same thing. So I was working literally in the exact opposite direction of like where the market was going and everything. You know what I mean? So it was like, so my initial instinct was that because I was so fascinated with the technology itself, and I was like, there's no way that this is not going to be, this is my initial assumption, right? There was definitely some doubts along the way, but my initial assumption was that there's no way that this is not going to come back like gangbusters one day. Mm-hmm. You know what I mean? And that this really has the potential to change the world. And we didn't know what all that looked like. We didn't know what DeFi was at the beginning of 2018, at the end of 2017. I mean, some people, I don't think the term was coined until a little bit later than that. Yeah. We didn't know about all the stuff we could really do with Ethereum. Like, people were literally trying to figure out, like, what do we use smart contracts for? What do we use this for? What do we use that for? Is Bitcoin dead? Is it over? I mean, there were so many unknowns back then.
Yeah, I remember having those conversations about like when you're building like dApps. It was like, well, what? Like, it's like, okay. Oh shit! And this just reminded me just recently because of the non-fungible tokens, the kitty was it Crypto Kitties? And we were talking about that, and it's like, man, that would have been the time to buy them all up. Can you imagine buying those all up?
It would have been the time to buy up the CryptoPunks.
Yeah.
Those are the ones that are super, super valuable. And we've had CryptoPunks sell for over $1 million. Some of the kitties have been good too, but yeah, I think the CryptoPunks is definitely a much more valuable collection. It's absolutely nuts.
Yeah, it's great. What happened with those with all this crash? I haven't even checked it. Did those prices crash?
You can look at the Punk floor price and what it's done. I think there's a place where you can track that on a graph. I look at the you look at indices or indexes. Let me find it. CoinGecko. I got into hash masks, which is a new NFT. I bought like one of the floor masks just to own one. But they actually have indices or indexes of these where basically people put them into a contract, and then it tracks the price of those, and so people can just tokenize them and buy them and all that kind of stuff.
Oh, nice. Okay.
So you don't have to buy an entire thing. You can just buy a fraction of the performance of them.
Okay. Okay. Just like an EFT. So.
Yeah, kind of. Yeah. The reason I bring it up is you can track the price of it, and that gives you a pretty good idea of what's going on with the market.
Now, were you able to pull up that chart for on the?
Yeah. So let's see here. I'll look at the hash mass index first. So how do I?
There should be like a share at the bottom.
Share. Okay, let me just full screen this. Okay, so I want to share this screen.
Oh, and for you guys, I see you guys asking about his course. So yeah, so one thing also about Gregory. So we're talking about obviously Bitcoin and cryptocurrency here, but the main thing that Gregory specializes in is teaching developers how to become, or teaching people how to become blockchain developers, and to actually, because there's a lot of money in actually becoming a blockchain developer. So Gregory has a course. If you go to his channel, you can find it, or what's the direct link? Just dappuniversity.com or
dappuniversity.com/bootcamp.
Okay. Yeah. dappuniversity.com/bootcamp. And I think the course they're asking about price too. It's what can they get it for?
If you sign up with the bootcamp link, you can get a discount.
Okay. Yeah. So go sign up and go check that out, and go through there, and you'll get the discount. So I don't want to quote a price, because that might change in the future, and this stream's going to be out here for a while. So just sign up and you'll be able to check that out. And so many students going through it, a lot of good success stories. So.
Yeah, totally. And we just had a guy get hired at Bittrex, which is a big cryptocurrency exchange. He's a part of the membership program too, part of Blockchain Master University. I just saw his story pop up yesterday. It's pretty awesome.
Oh, awesome.
Yeah. The one quick plug on the blockchain development too. It's one of the cool things I love most about blockchain is there's so many different ways to make money with the skill. So you can of course get a job. That's what most people want to do. To advance their career. You know, I mean, people who are interested in crypto, all that kind of stuff. I always say blockchain is one of the best ways to actually get more crypto, because like, you know, you're gonna be plugged into the space. You're gonna understand it better, but it's gonna fix your cash flow problem. You know what I mean? If you want to buy the stuff, that's what most people need long term. But there's lots of other stuff. And what I want to bring up is like you can, of course, become a freelancer, build your own app or something like that. But you can like build trading bots. You can do DeFi as a developer and actually have some competitive edge. But the coolest thing, I've always said this for a long time, and now I have somebody who's proved me right, which is becoming a blockchain developer actually makes you a better investor, because it helps you understand what you're getting yourself into. And I just watched a live stream today with Mark Cuban on the Bankless podcast. So go subscribe to Bankless if you haven't already, where he's learning Solidity.
Oh, wow. Okay.
Programming language to create Ethereum smart contracts. So his whole idea is like, it helps you understand smart contracts better. So he has the same approach for other stuff he's invested in. Like he's invested in AI companies, all this kind of stuff. And he got his hands dirty and learned some of the basics on that too. But that's his whole thesis is like, I think he's spot on. Like just having some knowledge about how it works will help you weed through the BS, help you see what's actually possible on the blockchain, how it works. And there's tremendous upside to it, even if you don't want to change your career doing that.
I thought you were going to say that the best thing was that chicks dig blockchain developers. But,
that's
oh my God.
Show me your Blockfolio account.
All right.
So yeah, I can show you this chart. Sorry. So
okay.
This is what I was talking about before, the NFTX index for hash mass. So you can see that, the NFT market, I think, is kind of, cooling off a little bit. I don't think NFTs are dead by any stretch of the imagination, but this is what's about the index. You can kind of track the price of what's going on with those. This is a particular NFT hash masks, but let's look at the rainbow chart. So the stock to flow.
Yeah.
So this is what you're talking about. So basically, the whole idea with stock to flow is that the Bitcoin supply, so here's what people want to understand. Everybody throws around the number of 21 million Bitcoins. Well, that's a maximum number of Bitcoins ever created. Right? That's not the current supply. The current supply is like, I don't know off the top of my head. I can look on CoinGecko, but the whole idea is that it's going to take a while before all of them are created, like 21 something. So it follows a very predictable issuance schedule. Like new Bitcoin is created when Bitcoin is mined. That's what Bitcoin mining is about, is new Bitcoin coming onto the blockchain to pay miners. They're also paid by your transaction fees. They're also paid by mining. But this graph basically shows the issuance schedule for Bitcoin, and it cuts in half every 4 years. So basically every 4 years, less Bitcoin is created per block to pay miners, which basically makes Bitcoin more scarce over time. Okay. So assuming that demand for Bitcoin increases over time and the amount of Bitcoin, assuming that the flow of Bitcoin decreases over time, it produces this model called the stock to flow model for Bitcoin to try to model the price. Okay. You can see the performance in the past of the model. You can see where it's headed in the future. The whole idea is that whenever the Bitcoin price is below this line, it's undervalued. And whenever it's above the line, it's overvalued.
Right. And the thing I think that's interesting about this chart, like I was saying before, is that, I mean, guys might not realize this from first looking at it, but it's an exponential, it's a logarithmic scale. So, so when we're looking at these prices here, like, you know, if this were not a logarithmic scale and that this was like, you know, if the bottom was like 0 and the top was like $10,000 and it was equal increments, for it to track the predicted path would not be, I mean, that's, you know, like something goes up, it's going to go up diagonally, right? So, but for it to track an exponential, a logarithmic path like this, to me, that says a lot, because mathematically, yeah, that's really unlikely and for it to track it so closely. And again, like we were saying before, it's like, where's it at right now? It's like exactly, it literally fell to exactly where it predicts it to be. Which is just insane, right? It's like, so I don't know. So that was the thing that made me go in on Bitcoin. After I read the book and I looked up the stock to flow chart, and I was like, wait a minute, like this is the most compelling evidence. Not to say that there can't be a black swan event, but to me, I was like, wow, okay.
Yeah, totally. Yeah, I'm with you. I mean, at the end of the day, nobody knows what's going to happen for sure long term. We can take the historical data. We can take some really good educated insights into how we think what the nature of this is. And at the end of the day, we make bets. You know, we make bets. That's the best we can do.
Yeah, no, that makes sense. So one thing I want to address here, because a lot of people are talking about this, and you know, just this whole thing, because this is a very true, right? Like, so it's like being in real estate or like car sales, and it's like, you know, guys, I mean, well, I don't know, if you trust me, I can tell you that Gregory is the real deal. I mean, first of all, Gregory doesn't make price predictions. Like, I mean, you know, he talks about what's going on, but his primary business is teaching you to learn how to become a blockchain developer so you can make real money actually doing a job, writing code, and, you know, or doing it on your own. But you know, that's the primary thing. So I think that's a little bit different than, you know, the guys that are like, buy my course on how to make millions of dollars in crypto. I get that. I don't know. What's your take on all that? Because you deal with this space every day. So
yeah. And you know, I'm not gonna call any names or anything like that, but you know, like, yeah. Well, I mean, one of the reasons I've been talking so much about the price lately, I mean, early on my YouTube channel, I didn't really talk about it that much. I try to focus on the tech and development, and really experiment like what resonates with people. You know what I mean?
Right.
Part of in a bear market, people don't really want to talk about the price that much.
That's true.
That's not necessarily the best thing to talk about. But right now, it's top of mind for everybody. You know what I mean? And so to reach more people, and to, you know, kind of tell them what my thoughts are, my honest thoughts. I just tell people what I'm personally doing. That's you know, I'm not telling you something I wouldn't do. Like if I take money off the table, I'll tell you that I took money off the table, et cetera, et cetera. So the biggest thing that I watch out for is when somebody comes and says, all right, guys, like I've got this secret 100x altcoin gem. You know what I mean? That
Yeah.
it's just going to explode. Not every time, not everyone who does this, but some people who do it just bought a big bag of that stuff and then they tell you about it and then they sell it after the video goes live and they dump on you. You know what I mean? So that's something you definitely gotta watch out for. And I'm not doing that to like call people out. I'm not saying everybody who ever talks about small cap coins is doing that. That's not what I'm saying. But there are plenty of people who do that, and you got to watch out for that stuff. You got to ask, why is this person telling you this information, and try to be discerning.
And there is a lot of unbelievable stuff out there too, right? Because like, I mean, like some of the stuff that you've led me on to, right? I mean, I think one of them was like the Len token from Aave, right? That thing, like you said, John, put $500 in this, and it turned into 20 grand. I mean, it's less now with the crash, but that was, and then like on 1inch exchange, and was the other one
Swap.
Yeah. So just by using it, I mean, you're like, John, go collect your $3,000. And I went over there and I was like, what is this for real? And I literally just got $3,000 just because I had used it one time. Like that's how insane. And so, I mean, it's like, it sounds unbelievable, but I literally went over there and I have the money. So I know it's true. So
that's what makes this space so hard, is that it's stranger than fiction. The truth is stranger than fiction often. That being said, there's plenty of stuff that's not true. You know what I mean? And it's really hard to weed out. The discernment is really challenging. And that's something I've had to build up just from years of watching the space every single day. You know what I mean? And that's one reason I think that the technical skills also give you a big edge. Yield farming is really hot right now. It was hot last year, but there were plenty of people who got quote unquote rug pulled in yield farming, where they put money into a project and then, it's the team exits, right? And takes off your funds. If you're technical and you can read smart contracts, you can look at the code in the blockchain. You can know like what not to stick your funds into, something like that. You know what I mean? So yeah, there's lots of scams. There's lots of really unfortunate stuff that newbies are going to get completely burnt on. It's tragic.
Now let's talk about the difference, because Bitcoin, Ethereum, right? It's funny. I just had this email exchange with one of my coaching clients, and he's like, Ethereum is a scam. He's like, enjoy it going down to zero. And I think that's funny, because I mean, people have like there's a lot of fanboyism too, right, in this space as well, right? Because it's like, because people are heavily invested, right? They have a big dog on the or horse on the race. So what like, why would someone put their bets on Bitcoin or Ethereum, or why do you like Ethereum so much? I guess
I like Ethereum.
Yeah,
totally. I'll put it this way. I think Ethereum has the strongest chance out of anybody out there right now to become the world's computer. That's sort of like the source of truth for DeFi and all these other things. Well, there's lots of reasons. I'll try to break them down. That's the first one. I mean, I work with Ethereum all the time, and some people could say like, "Hey, you're just biased. Your business is based off Ethereum, all this kind of stuff." But yeah, like think about the opposite way. Like, where have I focused a ton of time and energy to make the biggest bet, to like build my business on top of, to invest a lot of money into, all that kind of stuff? Is what have I really thought about? Okay, and try to make a good decision. So. I think Ethereum has the best shot at becoming the world computer global smart contract platform that we, do a lot of DeFi on. There's so many like threads that are like kind of going off right now. I'm trying to organize.
Maybe let's back up a little bit and kind of maybe just let's talk about what Ethereum is. Because I think when people hear smart contracts, the programming language, like they're like, what exactly is? I think Bitcoin, even people are confused about, but Ethereum is really this mystery to most people. Yeah.
So let's just start with blockchains in general.
Okay.
So what is a blockchain? Well, you think about like a network. So it's a network of computers that all talk to one another, peer-to-peer network. Okay. Blockchains are made up of nodes. So like I can host a Bitcoin node, John can host a Bitcoin node, everyone watching the stream, and thousands of other people can host Bitcoin nodes. And that all keeps a copy of the code that runs like the Bitcoin program, and also a copy of the ledger that says how many Bitcoins I own that John owns, whenever I send Bitcoin, it like makes a round trip through the nodes of the network and it settles that transaction. Okay, that's a blockchain. So there's lots of different blockchains out there. The Bitcoin blockchain is about running the Bitcoin cryptocurrency. That's its primary purpose. It has a few other capabilities. You can like run simple scripts and stuff like that. But that's pretty much all people use it for. Ethereum is a younger blockchain, about 4 or 5 years younger than Bitcoin, but it takes it to the next level. So it runs a cryptocurrency called Ether. People call it Ethereum. I say Ethereum too, just because it's colloquial. That's what people understand. But the cryptocurrency is actually Ether. Okay.
Right.
So it's kind of like Bitcoin. It's had lots of fundamental differences. But the big difference with Ethereum is it takes the capability of the blockchain to a new level. So you can write code, you can write programs that run on the blockchain itself natively. You do that with smart contracts. Those are the building blocks of decentralized applications that run on top of Ethereum. And so what that looks like is, you can create apps that have a website, and instead of that website talking to a backend server, it can talk directly to a blockchain and talk to smart contracts where you can run arbitrary code to Turing complete language solidity is, whereas Bitcoin mostly just has like kind of some scripting capabilities. And you can create really sophisticated programs. That's what's going on with decentralized finance, or DeFi, right now. It's the biggest use case for blockchain technology. It has the most adoption. Basically, this is taking traditional financial applications and porting them over to the blockchain. Things like savings, lendings, derivatives, trading. Basically, anything you can think about that exists in the current financial system, people are experimenting with it on top of Ethereum right now. And some of them, there are billions and billions and billions of dollars of liquidity locked into these DeFi protocols too. So I say experiment. It's true, it's still experimental, but there's a lot of money into them.
and so just so people understand, like the contracts, like smart contracts. So like at a very simple level, like if I had some contract that said, if some event happens, then release this amount of money to, this address, right? Yep. Like let's say that let's take a bet. Let's say we're making like a bet on the Super Bowl, right? If the Bucks win the Super Bowl from this data pool that I get, this data feed, and that says this value is true, then $5,000 goes to this account. So I could create a smart contract there, and then like if I just had that sitting out there without a blockchain, then someone could manipulate that. Like I have to trust the party or the person executing that. But because it's on this blockchain, it requires all these nodes to validate that yes, this one said yes, this one said yes. So you've got hundreds of thousands of nodes, and if a certain majority of them where you have enough confidence says yes, then you can be absolutely sure that no one could have manipulated that, because you can't control all those nodes. Is that
yeah. So some of the values of blockchain are immutability. So it means the contract can't be changed unless the contract is designed to be changed. That's a whole different can of worms there. But basic smart contracts can't be changed. Immutable. The blockchain ledger is immutable.
Right.
Trustlessness is the big value that you're talking about. So I don't have to trust that a third party intermediary is going to fulfill this. As long as X conditions happen, I know that I'm going to get blank. Right. So it's a smart contract. Also, transparency is a huge value.
Yeah.
You can go look and see how it works. You can audit the code. You're not just looking at a GitHub repository where you got to like trust that that's actually what they're running on their backend server. You know what I mean? Like, no, it's actually on the chain. So there's lots of use cases for smart contracts. One of the most popular use cases, and this dates back to the early days of Ethereum, are just new cryptocurrencies. So you hear about tokens all the time. So originally tokens were different from coins. There was a distinction. Some people still hold this distinction. I don't know that it's that important, but all they have is a token. Is a token's a currency that runs on top of a different blockchain. So one of the things about Ethereum is you can create your own cryptocurrency without creating your own blockchain with a relatively simple smart contract. It's called an ERC20 token. So anytime you see ERC20s listed on cryptocurrency websites, that's their Ethereum-based tokens.
Right. Okay, so like when I stake when I got like rewards from like staking or like on Aave, or like got the Len tokens back, those were ERC20 tokens, right? Because they were created based on that. So
Yep.
okay.
Totally.
And so then hopefully you guys kind of understand it. Yeah, obviously it's pretty complex, but hopefully you understand kind of the basics. So then based on that, so then the whole like case for Ethereum over Bitcoin, where does it kind of?
So I'll tell you a lot of why I'm personally invested in it. The ratio of Bitcoin versus Ethereum. I'm way more heavily weighted towards Ethereum. Part of that is simply because of when I bought a majority of my cryptocurrency. I perceived Ethereum to be more undervalued relative to Bitcoin at the time. And also perceived that Ether had a higher upside potential, assuming that we follow the cycles. Part of that's got to do with the market cap of the cryptocurrencies. Market cap is basically the value of all the cryptocurrencies in existence of each cryptocurrencies. Like Bitcoin's market cap just recently hit $1 trillion.
Yeah.
You know, was $1 trillion.
Yeah, not anymore.
And so that means all the Bitcoin in existence was worth $1 trillion at that time. So Ether's was worth about $200 billion. The whole idea is that a lower market cap cryptocurrency is easier to go up in price. That's why people talk about the 100x altcoin gems and all this kind of stuff. So part of the reason that I was more heavily invested in Ether is just because of the market cap. I perceive there to be a lot of incoming demand for Ether. And when a lot of incoming demand flows to a cryptocurrency with a smaller market cap, it's got higher upside potential. So that's one of the biggest reasons, just to tell you the truth. That being said, I am super bullish on Ethereum as an asset. So why would people come in and buy it, I guess is the next question. Simply because you can do a lot more with it than Bitcoin. Yeah. And if the correlation is true for the number of active addresses and all this kind of stuff versus the price, that's incredibly bullish for Ethereum itself. I mean, I'm sitting here every day watching all this money flow around on the Ethereum blockchain. And it's just hard not to be bullish on it when you're seeing all that every single day. It's kind of boring to watch the Bitcoin blockchain. You just watch Bitcoins go around and not really move. You know what I mean? So that's why I'm super bullish. People talk about, Ethereum competitors, you know what I mean? All that kind of stuff. We can talk about that if you want to. We talk about if Ethereum's a scam or not.
Yeah. So I guess like a couple of things, like, and maybe we can kind of weave it together, which is, obviously you've got these competitors out here. Dot. You've got I forget.
Cardano is probably the biggest one.
Okay. But then you've got Ethereum 2.0, right, which solves a lot of the issues. So I guess like one question is like, which horse do you bet on and why? And then also like, what are the like, what's like the danger, right? Like what's the big risk that you have in this?
I got plenty to talk about here. Okay. So full disclosure, I own, like I said, mostly Ether is the biggest holding in my portfolio. I own 0 DOT, I own 0 Cardano, I own other stuff. I'm not saying these blockchains will never flourish and have users, but I don't think that they'll steal Ethereum's market share in the short to midterm, and probably also not the long term. It's just my personal conviction for lots of reasons. So we'll start off with the major Ethereum killers, because DOT and Cardano are probably the biggest ones. Part of it is like it's literally the core, at least of Cardano's marketing. Like they position themselves as the ETH killer. The biggest problem with Cardano right now is it doesn't have smart contracts on mainnet.
Oh, really? Okay.
Yeah. So it's hard to be Ethereum killer, like if you can't actually build apps on it.
Yeah.
Polkadot's a different story, but the bigger picture is like none of these other blockchains have actually fulfilled on their long-term promises either, right? There's just a lot of hype that like this is going to come in and take Ethereum over. You know what I mean? Like it's just too slow. Ethereum's broken, but people don't see the rapidly developing roadmap for Ethereum, right? They don't see like how fast it's moving. So some of the really big bullish things on Ethereum pretty soon are what's called layer 2 scaling solutions. So this is basically building an additional computational layer on top of Ethereum itself to help out with the gas fees. So if anybody's actually tried to use Ethereum lately, you might see it's expensive. You know what I mean? Like to do anything is super, super expensive. There's a lot of innovation happening to fix those problems. My really broad prediction is that layer 2 becomes widely adopted in 2021. I don't have really firm timelines on exactly when that's going to happen. They are here. We already have some apps that do it, just not widely adopted. And we're still working out some of the kinks on some of that stuff. But it could be like we're weeks away from somebody major like Uniswap rolling out layer 2. Okay.
No, when you talk about layer 2, is it like layers in like the network protocol where you have like a encompassing an envelope that encompasses something that's a smaller computational unit, and by rolling it up you get more power? Or is it different pieces of the network, like different nodes that are gonna process things? Like how does it? Yeah.
Well, so there's two different things on Ethereum's roadmap. One is layer 2 scaling solutions. The other is actually Ethereum 2.0, which is shipping. We don't know exactly when it's going to be here. That's why people think Ethereum's a scam. They think Ethereum 2.0 will never ship, et cetera, et cetera, et cetera. We can talk about that here in a second. I definitely don't think Ethereum's a scam. So layer 2, there's lots of different things that could be a layer 2. So what you're talking about, like rolling things up with smaller computational kind of batch is what you're talking about. That's called a roll up. So that is one strategy for layer 2. They all have different trade-offs. I'm most excited about optimistic rollups. This is a particular layer 2 scaling solution, which basically does that. It rolls up a lot of transactions, makes it cheaper to use. That being said, there's a trade-off, which is not secure. It's not designed to secure as much value as the base Ethereum layer chain, but that's going to solve the problem for a lot of people who are like, hey, I just want to go trade $100 or $1,000 on Uniswap. That's going to solve that problem.
Okay, so just so if I understand it correctly, I'm just guessing here, but I would assume then what that would mean is like, I support this layer 2 protocol, you support this layer 2 protocol. So instead of me sending one smart contract for every transaction, I take like 20 of them and I put them into one contract, and then you process that whole thing, or is it something, I don't know? Tell me what it.
I feel like we're on kind of. So part of it is if you want to use layer 2, you have to migrate your funds to layer 2. So there's going to be some pain for people who are on the layer 2 right now. You have to jump up to layer 2. Okay, but once you're on layer 2, you can stay on layer 2. But there's also a big like push for exchanges to let people withdraw onto layer 2, so that once their funds are on there, like they don't have to make the jump. Like the exchange just does it for them. You know what I mean?
Oh, okay.
So like once you're on layer 2, you want to probably stay on layer 2. Now, layer 1 Ethereum will continue to be the whale chain. Like if you're securing 7 figures with a cryptocurrency, or, you know, I mean, it depends on the solution. I mean, but let's just say 8 figures. You don't put 8 figures on
layer 2.
Probably not.
But you still have your own individual wallet in that case, or is it sort of a?
The wallet stays the same. All that kind of stuff.
Okay. So you still have, it's still decentralized. Like you still have you're controlling your wall. Okay.
Yeah, there's some things I don't 100% understand, because it's really hard to get your hands on layer 2 tech and actually right now. So there are some things that, you know, I'm not a full expert in yet, because I just haven't been able to use it enough. I've played around with some of the sandboxes and stuff. So I want to learn more. But for the most part, the user experience is the same. It's just faster and cheaper.
Okay. And then what's the major thing that could happen? You know, I mean, people call Ethereum a scam. I think that doesn't make, I mean, I guess if you think that Ethereum 2.0 is going to be vaporware, but what about like what could happen? I think some people were concerned about Ethereum because it's like a company controls this, as opposed to that's Bitcoin, which is
so people think about Bitcoin versus Ethereum. So I mean, I'll give you full disclosure, like Ethereum is a riskier bet than Bitcoin. It is. It's a riskier bet than Bitcoin. You know, we see not wide, but we're starting to see institutional adoption of Bitcoin. You know what I mean? We're starting to see some for Ether. I think that we see more institutions are going to be more willing to buy Bitcoin right now than there are Ether. Just true. True. Yeah. There is risk with Ether. We don't know that Ethereum 2.0 is going to ship, on time. There could be problems with it. That may not be everything that we promise it's a real risk. You know what I mean? But it's a risk reward trade-off. Like Vitalik is a smart dude. Vitalik Buterin, the co-founder of Ethereum, is a boy genius. You know what I mean? The dude is sitting on a ridiculous amount of money. So if he wanted to exit scam, like he could have exit scammed a long time ago. You know what I mean? Like this dude, yeah. So he clearly is not just motivated by like, you know, he's not just rug pulling everybody. You know what I mean?
Yeah, exactly.
There are different motivations. It's pretty clear there are different motivations there. I think he wants Ethereum 2.0. There's the other thing to think about. This is the counter argument to all the Ethereum killers. It's really hard to build Ethereum 2.0. Okay. Yeah. Like you're basically laying the track while the train's rolling. You're fixing the plane while it's flying. You know what I mean?
Yeah.
And you're trying to literally accomplish a massive technological innovation that no one has ever solved before. And part of that's what's called the scaling trilemma. So like if you look at the three different things like security, decentralization, and scalability,
right?
Those are all like trade-offs when you're talking about making something that's fast, secure, and also decentralized. That's the whole point, is creating something that like, you know, regulation crackdown can't come in and censor. You know what I mean? That like somebody can't just like nobody can turn it off. You know what I mean? And to create a world computer that nobody can turn off that can compete with something like Visa, it's really hard to do. So you should have some skepticism whenever somebody says, oh, we're just going to come in, like take over Ethereum. You know what I mean? It's like, okay, well, explain yourself. You know what I mean? That's sort of the Ethereum killer fallacy that I think people don't think about enough.
And this, just in case maybe I phrase this wrong, I don't know the answer.
That's okay. I'll answer it. Yeah. So the Ethereum Foundation is the one who basically founded Ethereum. So Ethereum has a founding company,
right?
Or a founding foundation, I should say. Whereas Satoshi Nakamoto just created Bitcoin and just like turned it on and let mining go on, right? I think that's the clarification there. So you see this pattern though a lot with decentralized technology, where it starts off more centralized and then decentralizes over time, right?
Right. And exactly, yeah.
You see that with like a lot of the DeFi apps. That's where I talk about like, you know, smart contracts can't be upgraded, but some actually can. You know what I mean? It's like part of it's you're in early edge software, and so you want to be able to like change things. So there is some centralized control, but we have like things that, you know, make it hard for people to just like pull all the money out. Like there's mechanisms that make that more challenging. But you still have this massive added benefit of transparency, even if it's not fully trustless. You know what I mean?
And I guess, you know, at this point, right, am I correct in saying that, I mean, Ethereum has already been forked, right? So it's like if the foundation was like, nah, we're going to do this thing that, you know, that screws everyone over, you know, people would just fork it and just say, well, you know, fork you guys. Yeah, we're going, you know, we're and everyone would just migrate over to the way that it was before, you know, or whatever. Like the consensus would drive it at this point to prevent bad actors, right?
Yeah, the community could run its own copy of Ethereum, basically. Yeah. And that being said, like it would be bad if something like that happened. You know what I mean? Like there's no doubt it'd be bad. But like I say, Ethereum is a riskier bet than Bitcoin. But I watch it so closely that it's a risk that I have, you know, made a bigger bet on than Bitcoin.
And we've seen it happen with Bitcoin, right? Because there was a couple of or that one really famous Bitcoin bug or whatnot, but I guess a bug exploit where they forked over and basically reversed the transaction because the consensus said that, even though, you know, technically that was like, you know, but the consensus said yes. So
totally. Yeah, you see that kind of thing. And I think I don't think Bitcoin is actually immune from that happening in the future. I can actually tell you why about that in a second. But Ethereum did the same thing in the past. So you have Ethereum Classic as a cryptocurrency on the charts. There's something called the DAO hack that happened in, I think it was 2016. I may get the year wrong, but it was like an early experiment where people were putting money into an app, and there was a massive security bug. People lost a lot of money, and they forked the chain.
Okay, yeah. And I guess that's a risk, right? That's what I guess we haven't talked about that too with Ethereum, is that it's code. So
yeah. But here's the big benefit with Ethereum 2.0. It's here now. The beacon chain is they're developing this in parallel to Ethereum 1. And currently, my understanding is the roadmap is Ethereum 1 is going to get merged in as a shard to ETH 2.0. So if something goes wrong in ETH 2.0 right now, they can just fix it. You know what I mean? Like they can do that on a separate chain where we don't have users. Now, people who are staking on ETH 2.0 right now have walked down a one-way street.
Yeah.
But hopefully at least 99.9% of people who went through that process realize that. I mean, you have to go through this ridiculous set of steps in order to do it. So there's nobody who's just like, clicked the button and moved over to ETH 2. You might have that on an exchange or something like that. If you're watching this video, you haven't like gone through the technical steps of setting up an ETH validator. You would definitely know if you had. Yeah, those people. But if something happened to their funds, I think they would basically just fix it, and it's less of a risk than what's going on with ETH1 right now.
Yeah. Okay. That makes sense. And the contracts themselves, though, those have a risk in the sense that like if you like even like a DeFi, like for instance, if you stake, you're relying on the way that they're doing that with the lending the money and paying you interest is based on on tying it up into a contract that is a bunch of code that is programmatic, so someone can technically hack that or exploit that code, right? And that's happened in the past. Yeah.
So I always tell people I do think DeFi is the future. Whether it completely replaces the financial system we have right now, or it just presents a really amazing alternative that gets a lot of market share. I think one of those two scenarios is going to happen. That being said, it's so early that I don't really advise most normal people to go like mess with DeFi. You know what I mean? Because of these risks. So smart contract risk is the big risk you're talking about. That's what we call it in blockchain. So basically, you just don't know what you don't know at the end of the day. A smart contract could be hacked or exploited. We've seen a number of these happen. I don't personally keep large amounts of money just sitting in smart contracts with DeFi. I've done yield farming stuff in the past, but not with like crazy amounts of money. And even when I was doing it, I didn't leave it in there very long. It's just a risk reward scenario for me. I don't personally like to farm for that reason, because if your principal goes to zero, like it's worse than buying a risky cryptocurrency.
Right. Exactly. Yeah.
So like, I think one of the coolest things about DeFi that I think is a killer use case for most average people is the ability to earn competitive savings rates.
Yeah.
So you could put on a stable cryptocurrency. So you can buy a stable cryptocurrency like USDC, for example. It's pegged to the US dollar. Stick in a DeFi app and earn like 10% interest.
And in that case, there's not smart contract risk when you're doing it that way.
There is.
Okay.
That's what I'm saying. I think where I was going with that is I think that's a killer use case for the average Joe. That means that I don't recommend the average Joe necessarily do that.
Right.
So I think we're going to get to the point where this becomes it's de-risked or less risky than it is now for a couple of reasons. One, we're already having like ways where you can buy deposit insurance in a decentralized way.
Oh, okay.
Where if something happened, you could get it back. Now, that being said, there's still lots of kinks to be worked out with that too. So I'm not saying even if you buy deposit insurance, you're 100% safe. Here's how I see it playing out in the future. I think this is what's going to happen for most people. I think we're going to see a wave of digital banks. People talk about DeFi being like self-driving banks, where you go to a website. Most people, I think, are going to log in with a username and password, KYC, give them just like you would do in a cryptocurrency exchange. If you bought crypto on something like Coinbase, I think Coinbase will basically become like a digital bank. That people are going to associate it as that. We'll see lots of other people probably pop up that do a very similar function. And I think one of the primary things is you're going to have a digital currency, a stable dollar, a stable coin that moves around on a blockchain, that's settled on a blockchain. Your account balance is denominated in that. And you can just like, press a button to lend it, basically, to deposit and earn, basically opt in to those competitive rates. Right. And on the back end, you're probably going to have a centralized company that gives you the added benefit of security, who is doing DeFi on the back end and then charging you a premium for that, but you're still able to earn a competitive interest rate compared to your bank account. That's what I think is going to happen for most people.
Yeah, I think that makes sense. I mean, that's more effective capital deployment, right? So that's and then the decentralized portion of it, where you don't have that big risk.
And the reason you're able to offer these big competitive rates is because it's automation. You're cutting out all this fat from the banking system that has to so whenever you earn interest, there's a spread. So somebody's always lending your money out on the other side. So like if you earn 1% interest, which is not even that good, if you earn 1% interest, they're charging 2, 3, 4, 5, like way more percent for their loans, depending on what the loan package is, all that kind of stuff, right? But part of inside of there, they're taking off, they're taking a cut. That's how they make their money, right? So with DeFi, it's a twofold thing. They can offer way higher borrow rates for people who are borrowing money, because they're usually riskier borrows. Now they're over collateralized loans, but they're riskier borrows. The people are using them to make more money, so they're always willing to pay like super high interest rates.
Yeah.
And then there's like no middlemen. Like the smart contract is the middleman. You know what I mean? And so you can really cut down that margin to where the protocol makes less money, and there's less people, and that's how they're able to offer those competitive savings rates.
Yeah. Awesome. Well, got to wrap it up here. Gonna do my first masterclass here in a second here.
Awesome. So. Yeah. Right. So I hope it didn't go long.
No, it's good. This has been fun. So, so guys, check out Gregory's channel. Like I said, Dapp University, dappuniversity.com. Go sign up if you want to become a blockchain developer. Really good course. Like I said, Gregory is a coaching client of mine, so you can totally trust him. Unless you don't trust me, in which case then I don't know what you're doing here. But but no, he's been super successful. Build his business up to a 6-figure a month business, which is awesome. So go check it out, and make sure you subscribe to the news updates. He's been doing live streams every single morning, because I think if you're interested in figuring out where the market's going. I mean, I don't know anyone better that I trust more than Gregory to give me that information. So. So thanks, Gregory. Appreciate you coming out here and educating everyone.
Do this. So, yeah, very cool. All right. See you guys.